Thank you very, very much. It's extremely stimulating panel. What we learned is, anyway, IAIS, as an IAIS International Association, this topic, fintech, is global. So we work on this subject very much seriously. What I learned is, as Lee in the final comment mentioned, it's very much huge opportunity to provide better service to customers. So regulators are challenged. We need more timely action is needed, and we need, as some of you discussed, algorithm and so on. We might consider outcome-based type of regulation in the future. Sandbox, some jurisdictions are very much promoting, but of course, as an international organization, we want to discuss how sandbox are working, and we want to find a best practice of sandbox. As Ted very much stressed, we have a very strong mandate of consumer protection, so we have to ensure that customers are protected, and how sandbox will work, we should discuss very carefully among ourselves. Data issue, you discuss a lot. How we use data, data protection, usage of the data is another important regulatory issues. Perimeters of this supervision is another important issue. If platforms become brokers, agency, or even insurance companies, how do we regulate? We can collaborate with, for example, telecom industry now start providing credit, insurance. How do we work with those authorities? Those perimeters of regulation is another important subject that we should consider. In short, there are plenty of issues that we should discuss and find a solution together with you, and I really appreciate very stimulating discussion. So we take a break here, and we will meet again at 2:30 in this room. So have a good break and lunch. Thank you.
Thank you very much.
Thank you.
Ladies and gentlemen, just want to remind you that the tour will start at 12:30 for EXCO members and 12:30 for EXCO members and 1:30 for all other participants. The registration counter will be the meeting point. Thank you.
Thanks for
So good afternoon, our colleagues, friends. So we will kick off the afternoon session. This is the last, but some people say the best session of the whole 2 days. The title is Looking Beyond Current Reach, Increasing Access to Insurance. This theme is extremely important for our association, and some of you might not be well aware. Of course, people are aware of our ICS, ComFrame, ICPs, financial stability. But as we discussed this morning, one important leg of our association's activity is not only financial stability, but implementation of standards, and in particular, financial inclusion is increasingly important for our associations. We know that 5 billion people have no access to social protection, and huge number of potential economic growth will potentially cover enormous insurance policy holders in the future. So access to insurance, particularly under covered or no covered people, is extremely important, not only from the insurance development point of view, but social development point of view. And again, we have excellent panelists and panel moderator. So I will introduce panel moderator Jessica Chu. Jessica is Assistant Governor of Bank Negara Malaysia, but also she has been a long-time friend already for IAIS, and many of you know Jessica. She one time a very active member of governance working group, and we really appreciate, Jessica, we are hosted by you and moderated by this session. Thank you, Jessica.
Thank you very much, Yoshi, and good afternoon, and welcome to the final session of the 2017 IAIS Annual Conference. So it's been a full week of events for many of you, and I thought it was quite fitting as we draw the week's events to a close to actually come back to to a topic that that goes back to an important point the governor made yesterday, which is that as regulators and supervisors, we really shouldn't forget that the role we play is really to serve the broader objectives of promoting sustainable economic growth and improving the welfare of society. So on this panel, we'll be exploring some of the priorities, challenges, and opportunities for increasing access to insurance. So as Yoshi said, looking beyond the current reach of insurance to further develop more inclusive insurance markets. I have the delight of welcoming an exceptional panel with me on stage who will be sharing their insights on some of these issues today. So if you'll allow me to briefly introduce them to you. To the extreme left, we have Mr. Juan Pazzo, who is Superintendent of Insurance of the Republic of Argentina. To his right, Mr. Zainal Abidin Muhammad Kasim is Senior Partner at Actuarial Partners Consulting here in Malaysia. Zainal is well known in local circles as a pioneer in the area of takaful, and he's certainly well placed to talk about what takaful can bring to the table in terms of improving access. And I know from conversations there's quite a lot of interest in the room as well around takaful. To Zainal's right is Ms. Caroline De Silva, who is currently the Deputy Registrar for Financial Advisory and Intermediary Services at the Financial Services Board of South Africa. Both Juan Pazzo and Caroline are going to bring with them very different experiences from their own markets on issues of access that I believe you will find extremely interesting and that will be very relevant, I think, to many of us facing the very same issues in our own markets today. Then we have Ms. Olga Speckhardt, who is Head of Global Insurance Solutions at Syngenta Foundation for Sustainable Agriculture, which is a non-profit organization that's based out of Switzerland. Olga is responsible for developing the foundation's microinsurance initiatives globally, with a particular focus on creating value for smallholder farmers. And last but obviously not least, we have Ms. Fiona Stewart, who is Global Lead for Insurance and Pensions at the World Bank, which has done extensive work on issues of insurance access. And they'll provide a very useful context, global context for our discussions today. So let me kick off with the current state of play. I'm going to go to Fiona first to give us your perspective on what you see as some of the main issues when we talk about dealing with issues of insurance access. And if you can, perhaps also give us a sense of how some of these issues may change going forward, given how the world itself and consumer experiences are also changing. Thank you, Fiona.
Thank you, Jessica. I'm very glad we're sitting down, by the way, because there's too many actuaries in the room, and you understand risk and probability, and the probability of a risky outcome if we walk on this slippery stage in these shoes. So I'm very glad we're sitting. So the first thing I would say, one of the main challenges we see with access is following on exactly from the conversation we had in the last panel. So to just make a link to that panel. What we like to say in our group at the bank is that our goal is to provide more people with better access to quality insurance. And there is inherently, I think, a tension between the two halves of that sentence, the access and the quality. And I think a lot of the challenge that you as regulators are having is exactly the conversation from the last panel about that balance. How much access, how much innovation versus the protection. And there isn't one answer. The challenge is there's not one answer. So the innovation that, I don't know if Lee is still here, but Lee's innovation in Singapore is very different to a lot of the countries that we're working in, where people are coming to insurance. This is the first time people are even touching an insurance product. It may be the first time they're even coming to a financial product at all. So the level of protection for Lee in Singapore versus, I see my friends from Mozambique, Ophelia and co. Your sandbox, your level of access versus protection is going to be different to colleagues in other countries. So finding that balance, I think, is one of the biggest challenges I think some of the regulators face. The second thing I would say is in terms of pilots versus scale. So we love pilots. Donors love pilots. We love pilots. And my global index insurance colleagues, my GIF colleagues that Olga knows very well, we're doing fantastic work in terms of really innovating and testing products and new access routes in different countries. The challenge we're having is getting that to scale. And how you go from, so for example, we're working on, there's a very good livestock insurance program in Kenya at the moment, which has just been paying out for the first time after the droughts last summer for them, winter for us. The challenge we now have with that project is getting that from the targeted subsidized into a proper voluntary market that people then can scale up. And the fact, again, back to this innovation versus really making sure the first time that you touch a product, it pays out. And then you can say, this is why we're using this opportunity, because the farmers are now seeing this is paying. They're telling their colleagues this is working, this is paying. And that's, I think, a good opportunity to then start to scale. And that leads on to, I think, the third challenge we're having is what level of access? So should it be on a micro level? Should it be on a meso level, this new trendy new concept that Olga knows very well? Or is actually the macro the best way to get access to the lowest income and the most vulnerable? So we are working again on the macro level, apart from many of you will know our disaster risk colleagues who are doing a lot on the sovereign level, which is a whole other conversation. But a lot of work in terms of scaling social safety nets. So again, for example, in Kenya, we have a health program which already has access in terms of everyone, the households are targeted, they're banked, we know the people. So again, during the droughts, we used that access point of the existing social safety net, and then we were able to provide extra cash transfers on top during a very a difficult period. And we covered about 180,000 households, nearly 1 million people, in 2 weeks. We were able to do that because you had the access points in place. So rather than individually trying to selling micro products, sometimes it might be a micro level that's the way to access people. And then on the meso level, sometimes we're working in Peru, for example, with a MFI, a microfinance provider, and covering them for their loans, which they've been providing, and they find the biggest risk for them is during El Nino. So providing risk to the microfinance provider at the meso level to keep that market going may be the best way forward. And our colleagues are actually just looking at the moment, we have a new paper out about credit and agricultural linked. When is that best to use that? When's the best to use that bundled product? When's the best time to use it? And at what level should you come in? And finally, just to say that I very much appreciated Vicky's comment yesterday when we're saying we don't necessarily have all the answers yet in the fintech space. We don't know what good looks like. I think actually in terms of this proportionality versus consumer protection, we actually do. We're actually learning quite a lot of lessons. And Hannah, I know from A2I, and our A2I colleagues are here. And they've done a lot of very good work on experience with proportionality and how you start to open up regulation to support market development. I know you've done a big study of the first 10 years of micro-regulation and what was working. And you have some individual research out at the moment about what does proportional distribution look like, what does proportional reporting look like. So I think actually we do increasingly have some lessons in that space. So those are some of the challenges I think are out there and some of the lessons that we're learning. Thank you.
Thank you very much, Fiona. I think that's a great way to start because it provides or at least surfaces some of the key issues. And I think the big takeaway for me from that is, in different markets we're going to look at the same issues but from different perspectives and with different emphasis on the things that we need to prioritize. So I'm going to just turn to Zainal now, just to pick up briefly on the issue of takaful and whether, based on Fiona's comments, we were just briefly talking just now about the fact that in Malaysia we do have takaful products. We have a takaful market that's been around for 30 years now, but there is still a long way to go in terms of getting traction. So why? And let me invite you to comment on that, Zainal.
Thank you, Jessica. I think I'll make a presumption that many of those in the audience today, this could be the first time you've heard of the word takaful. I might be wrong, but to be safe on the safe side, I thought I would start off with just a brief introduction to Takaful. We know that insurance is a complicated business. It's something that effectively requires a lot of effort and time. Takaful, unfortunately, is another level more complicated than insurance. So, pre-warn you on that one. Why is it insurance is not Sharia compliant? I mean, Sharia compliant means it's acceptable from the perspective of the religious scholar, the Muslim religious scholar. I just going to go on one reason for this afternoon, and that one reason is insurance is not Sharia compliant as the business model for share-based insurance sees the shareholder making a profit or a loss based on underwriting results. So this is risk transfer, basically. This is a risk transfer business model. Now, Sharia is fine with risk sharing, but not with risk transfer. Thus, a mutual insurance model would technically be Sharia compliant. But mind you, there's just one basic requirement to be Sharia compliant, but that's a very important basic reason for Sharia compliance. Now, while mutuals, they make up something like 27% of the total insurance market globally, this was computed in 2014, these are well-established mutuals with significant accumulated surplus, and it's nearly impossible to establish a new mutual under the current regulatory environment. Now, whether that's good or bad, we can discuss that later on. We had our first we started off with our first Takaful company in 1986, and it was basically a hybrid model, a hybrid business model, a cross between a share-based insurer and a mutual insurer, because, as I mentioned just now, it's very difficult to set up a mutual under the existing regulatory environment. So a Takaful is a cross, a hybrid, if you like, between a share-based insurer and a mutual insurer. Now, you know how to manage a share-based company. You know how to manage a mutual company. But how do you manage a hybrid between a mutual and a share-based company? And that is actually, it poses a significant regulatory challenge. The main issue that we have is that we need to manage the conflict between shareholders, because shareholders want to maximize return on capital, and policyholders, because policyholders need to optimize value for money. Because of this conflict, the Takaful industry in Malaysia has more regulations to comply with as compared to the insurance industry. Remember just now I said at the beginning that Takaful is more complicated than insurance. Regulations is part of it, of course, but there are good reasons for that. So what are the issues and challenges and opportunities? Well, there are several challenges in the Takaful industry. The first one is the business model itself, because of this conflict between shareholders and policyholders. So it's a very challenging business model. I mean, I used to joke that, you look at the average tenure of a Takaful CEO in Malaysia, it's probably shorter than the average tenure of an insurance CEO. He has a tough job ahead. Okay. There's also a very limited pool of human capital that has Takaful experience. I mean, in Malaysia, we're not so bad because we had Takaful for 30 years. But you go outwards, outshore from outside Malaysia, the Takaful industry that's nascent in other countries, you find that, the way that Takaful is being executed in those countries are more like conventional insurance, primarily because of the fact that, of course, the regulations will have an impact, but also the people who run the business, basically, they don't really appreciate the difference between Takaful and insurance. We have a very competitive market in Malaysia. We have 11 Takaful operators. We've got 33 insurance companies. And these companies actually compete with each other in terms of selling either insurance or Takaful. We don't have Takaful windows, by the way. You either have a Takaful license or insurance license. Now, because of the fact that we only started Takaful in 1985, many of the Takaful companies in Malaysia actually started less than 10 years ago. Many of these Takaful operators are still running an expense overrun. They have yet to reach critical size. So the focus, if you like, in terms of the management of these companies is actually to grow their business, to grow the volume, if you like. And given the competitive nature we have in Malaysia in terms of the insurance and takaful industry, it's difficult. What we're here for is actually to determine, how can it that we can improve in terms of access or ensuring the bottom 40%. We call it B40 in Malaysia, bottom 40%. Now, the concept of takaful should be an ideal platform for ensuring the bottom 40% of the population. Takaful is an Arabic word. I understand it to mean solidarity. Okay? So it's not about selling insurance, but helping each other in a time of need. Solidarity. The less financially well-off proportion of the population will be very careful in terms of what they buy with their hard-earned money. I mean, if you have very little disposable income, I think you appreciate that before you use that money for anything, you want to make sure you're getting value for money. If you ask them to buy insurance, they want to ensure that they will profit from the purchase. I mean, I like to tell the story about a situation in India whereby, at one point of time, when they sell fertilizers, they would give free they would give free gift. It could be umbrella, it could be something, a token, a free gift. And then 1 year, basically, they didn't give that free gift anymore. They said, look, no more free gift, but we give you free personal accident policy. No more free gift. After 3 years, many of them came back and said, I don't want the PA policy. Can I have the free gift again, please? Because they don't appreciate, insurance. They're covered. Like, if they don't see the tangible benefit of insurance, they don't appreciate it. They rather have an umbrella. Okay? Now, in takaful, we don't call it premium. We call it a donation. Okay? The idea is that you make a donation towards someone who's facing a calamity. So this concept, I think, is more easily understood to the participant or the policy holder than insurance premium. Because what you're doing here is that effectively you're helping someone in your neighborhood. Not actually paying a premium to an insurance company. Now, what are the issues in terms of takaful? Well, you need to prioritize your resources, because if you want to access the lower income group for takaful, and this is the same as for insurance, you need a good distribution channel. I think we're going to touch on that a lot this afternoon. We need reliable data. As actuaries, we need data which we should determine what the premium rate should be. And of course, we need affordability. What is the disposable income of the people in that particular group? Developing countries such as Malaysia, we still have a large untapped middle income segment, which is not covered by insurance. So the takaful operators in Malaysia, and I don't blame them for this, are focused on this particular segment, as they need to ensure they have adequate return on capital. Because when you go to the bottom 40, things become more expensive per policy that you sell or you distribute. So profitability tends to be lower, if you like. If you look at it from the policyholder's perspective, a gauge of whether microinsurance or micro takaful is value for money is to look at the loss ratio of the product. What is the total claims incurred divided by the total premium that you collect? The higher the loss ratio, the better value for money to the insured. Unfortunately, though, for many microinsurance products, not just, I'm talking generally, globally, the loss ratio is very low. Maybe people don't know they're insured, and therefore they don't claim. Or maybe actually the claim, the loss that's being insured is unlikely to happen. Okay? So this raises the issue of potential mis-selling. Because if you just look at the loss rate, I mean, we got a few mis-selling events globally. I mean, the UK, a couple of times you see big mis-selling issues. And you can know it's mis-selling because the loss ratio of the insurance company is like 5% or 10%. Insurance company is probably making a lot of money out of this, see? Not to say that they're making a lot of money from the bottom 40, given that cost of providing accessibility to insurance to the bottom 40 could be more expensive than it is for other segments of the population. Now, partly because of this, the claims ratio, partly because of this, that the claims ratio are low, you have a high lapse experience for microinsurance. I would basically sort of guess that if you don't make a claim within once in every 3 years, people don't actually, in that lower income group, they probably won't buy the insurance because effectively, they could be patient for 3 years, but after 3 years, I think if they don't get anything tangible back, they'll probably lapse the policy. Final note is that we know that in many of the successful micro-insurance programs around the world, these are programs where premiums are free. They're packaged, if you like, maybe with airtime. They're packaged with with another product, as it were, either free or heavily subsidized. Because many of the microinsurance program in India, for example, are heavily subsidized. I mean, just now Fiona mentioned about the program in Kenya, which I was actually also involved in. But, you know, effectively, you know, it is basically financed by donors. So this is basically something that we have to face up at this point of time. We have problems in terms of accessing that particular section of the population. The question is how best to do it.
Thank you very much, Zainal. I think you've raised a few points that we'll probably come back to around issues of regulation. But certainly, Takaful does have its specificities that can meet the needs of the certain segments of the population. But you know, there are probably some an understanding of you know, what is involved in offering a Takaful solution and how do you manage that going forward. And I think you also raised a number of regulatory issues that I do want to come back to in a bit. But let me move now to Juan Pazzo. Argentina is a significant insurance market in Latin America, and obviously with huge potential to further increase penetration levels there. And I also picked up from your recent visit, I think it was to London, where you talked as well about reforms that are going on in the insurance sector in Argentina, and the changes that you're making to attract private investment into the insurance sector. And also you spoke about an effort to stimulate the introduction of new policies in the market. So can you talk to us about some of the current priorities for Argentina to improve access to insurance, and also if you can touch on a little bit about how you see the role of government and the private sector in terms of you know, enhancing access, and how those, where do you see that interaction and going forward?
Well, thank you. First of all, yes, it's amazing to see how different the South Africa and Argentina are. For example, we have a huge penetration of insurance, and for us, almost 87% of our insurance market is mandatory, meaning labor insurance and car insurance. We have a huge potential in Argentina, especially towards introducing low and middle class population into financial services directly. This effort means increasing transparency in money flows, which at the bottom of the pyramid is still very much physically cash traded. We have an almost 35% of an economy when you assume government that was informal. And we understood that the growth of the insurance business and the financial business is directly related to two structural factors. One is the growth of economy, and the other one is the distribution of income. It's important to understand that Argentina came from two crises. The 2001 financial crisis, that was a huge crisis to the banking and insurance sector. And we have been 15 years almost out of the world with huge restrictions in order to currency transactions, to dividend distribution for foreign companies. So we were almost a closed market. And if you don't have confidence in your financial sector, it would be very difficult for the insurance sector to grow significantly. So as we prioritize financial and social inclusion in our agenda, one of the first measures that this government took, and it's directly related to the insurance penetration, is to pay the social plans through a bank account and through mobile payments. We are talking about 5 million social plans in a population of 43 million of Argentinians. It's amazing, but from those 5 million persons that are in the lower scale of the population that were bancarized automatically, almost 2 million of them took loans related to this program. And how is insurance directly related to this? Because those 2 million loans have 2 million insurance policies, and which is the benefit to those persons? Mainly, the interest rate that they're paying, it's almost 1/3 that they used to pay in the microfinance institutions that were giving them the loans. And perhaps they don't understand directly that they are paying an insurance policy, but that insurance policy, it's the instrument that allows them to securitize those loans, and you could put those loans into the market, and that make them a huge benefit in the interest rates that they are paying. So the other incredible thing is that 70% of these loans were get through mobile payments, through a mobile channel. So in Argentina, we are the 7th largest country on earth. We have a huge geography that is very, very, we have only 4 cities that concentrate 60% of the population, but the rest of the 40% it's distributed among a huge territory. One of the first things that we have done is to approve digital payments and mobile payments for insurance policies. This changed not only the payments, but the distribution channel significantly. And we noticed that since we launched this program in January, we increased 13% the market directly related with insurance policies that were hired by mobile payments or digital payments. We believe that in our economies where informality is so big, turning people into the formality would increase significantly the insurance sector. The other program that we have from the superintendency that we are working together with the World Bank, the stakeholders of the agricultural business, the Ministry of Agriculture and the Ministry of Finance, it's developing an agro-insurance law. Despite being a large commodity producer, Argentina has not yet developed a sophisticated and inclusive product for covering crop losses derived from climate change's consequences. This creates a huge challenge for us because commodities exports represent more than 35% of Argentina's GDP. And not having a widely spread insurance service creates vulnerability for small and medium farmers and family enterprises. Argentina has not huge companies that are on the farmer industry. We have mainly small producers. And for us, this would be one of our key products in the next few months. We have just passed an election. We were a minority in the Congress, and we believe that we could pass the law in the next few months. This will facilitate the evaluation of risks and damages from events. We have a couple of technology providers that are working hard in Argentina, and we believe that in the next months we would have a program that would be public and private, and with the help of some of the multilateral organizations as World Bank and IDB in order to put this program in place. And I believe that the last thing that we have done is that as regulators, we were talking if we could be, which is our role as regulators. And perhaps in Argentina, for the last 15 years, the regulator was kind of an obstacle for the market. Right now we have like an open doors situation with the market, and what's happening is that the market is asking us to have to allow them to have new types of policies and new products. And it's amazing because for us, we are like a couple of steps back from other countries. So we are working together hand in hand with the private sector in order to put these new products in place. So we have tons of challenges here in my country. Thank you.
Thank you, Juan. Certainly interesting to see the developments in Argentina. I'm going to turn to Caroline because I think South Africa, as Juan you mentioned as well, presents quite an interesting contrast to the experience in Argentina, and very high level of insurance penetration, and yet access remains an issue. So why can you share your experience with us in South Africa, and tell us in particular how you got to that place where you were able to achieve those levels of access?
Thank you, and good afternoon. It's my first IAIS conference, and it's such a pleasure to have my first visit being in such a lovely place. I was introduced as the Deputy Executive Officer of the Financial Advisors and Intermediary Services, but since the IAIS stole Jonathan Dixon from us, I am now, as I've been introduced many times, the new Jonathan Dixon in South Africa, so I've taken over insurance. Don't know how Jonathan feels about me being described as the new Jonathan, but... So I was fascinated by the conversations over the last 2 days, and one of the questions I think earlier today or yesterday was the availability of data on microinsurance and inclusion. So just as a comparison, what I've tried to do is look at the OECD stats on penetration. And the reason I've looked at penetration is because very often the barriers to penetration are similar to the barriers for inclusion, with some differences and uniqueness for inclusion. And if you look at the penetration stats, and I'm probably repeating stuff you already know, but they use a ratio of direct gross premium against GDP. And there's a few countries in the world where the ratio is in excess of 5%. In Europe, it's UK, Italy, France, Switzerland. In Asia, I think there's 3 countries, Singapore, Korea, Japan, and forgive me if I get some wrong. But almost everywhere else in the world, the ratio is less than 5%. And in many, many countries, the ratio is less than 2%, with 2 exceptions. One is Ireland, which is over 10%, and the other one is South Africa at 15.9%. So when people talk about our penetration level being pretty high, it could be argued that it's because even though we're a developing country, we have a very developed financial services sector. The real answer probably lies in the fact that we have a unique pensions dispensation where most of our savings and pensions is done in the private sector rather than in the government sector. So while our penetration looks pretty high, our access still remains a very fundamental issue for us and very high on our priority list. So what I wanted to do this morning is share at a high level what our access strategy is. And you'll find that it goes to resolving some of the barriers to penetration in the same way as it goes to resolving barriers to access. And if we look at inclusion, there is sort of a 3-pronged approach, the first being access. So what are the barriers to access? The first could be geography. Then we have a very wide country with a lot of rural areas who don't simply have geographical access to bricks and mortar. They have a high demand for face-to-face, and as we know, insurance, we often say, is sold rather than bought, and people demand that face-to-face, and that creates a barrier to entry. It also results in higher costs because you want bricks and mortar and you have face-to-face distribution, which results in high commissions, therefore adds to the cost of products and distribution. And fintech, which is the second factor, could be a solution, a very good solution to access through the innovation around distribution. But at the same time, for inclusion, we've got to be very careful that fintech in and of itself doesn't create further exclusion for the market. Because if you drive fintech from a traditional perspective where people already have access, and you don't build inclusion into the protocols for that fintech, then you might exclude more people who now have more reliance on bricks and mortar, more reliance on face-to-face, therefore higher costs because they don't have access to payment systems, they don't have access to banking, and they don't have access to, the fundamental insurance market. So these are very important principles to look at when you're looking at fintech as a solution to inclusion. The third barrier in access that we look at is, of course, affordability. And there's many reasons and many factors for affordability from the macroeconomic. But we try and look at it from a perspective of what we can control. And one of the things we look at is where does regulation in and of itself create a barrier to entry for access while not necessarily providing better consumer protection, for example. And it's in this space that our microinsurance strategy is born. And microinsurance looks at a low prudential cost with a lower governance structure while building in consumer protections through product and distribution conduct. Fourthly, within the access, we need, one of the barriers is, of course, understanding, just knowledge of the financial market. And we have a very strong consumer education campaign or financial literacy campaign. And it used to be one that you just go out and educate people on the products that they have or what products are in the market. We very quickly realized that from an access perspective, this is not sufficient. You can't tell somebody about insurance if they haven't even got enough money to save, if they haven't got enough money for a budget, if they don't understand the basics of financial literacy. So our financial literacy program, based on a national strategy and targeted at particular vulnerable groups, goes to the basics of savings, budgets, credit, etc. And then when they develop an access to the market through the microinsurance, we start educating them on products. And that leads me into the second prong of our strategy, which is usage. Because it's not sufficient, and Fiona mentioned it in her opening, that you have an access to a product that you don't understand and that doesn't deliver to your expectations. It creates disappointment. And that goes to the second big strategic driver that we're all facing as a sector, which is this market conduct, this new ethical approach. So as a regulator, what we do is we focus in the usage area very much on treating customers fairly principles, on the shift to a focused market conduct regulator. We've gone through regulatory reform where we've introduced the Twin Peaks approach, and we will become the dedicated market conduct regulator as the FSB in future. And that looks at very much an outcomes-based approach, lots of principles, and also re-looking at our legislation once again to see where it's too rules-based and adding compliance costs without necessarily adding to protection. And it's also in this area that we play a very strong financial literacy or consumer education roles on people who do have access in understanding the market and their products. And the third prong of our strategy is what we call transformation. And that's not just about getting more customers into the market and making sure that they're treated fairly, but it's about looking at the market itself and how it needs to transform to be more inclusive, more representative of the entire country and the demographics of that country. And microinsurance plays a very important role here because it allows new entrants into the market with greater competition that can deliver inclusion products at a cheaper price. So essentially that's us in a nutshell.
Thanks very much, Caroline. I think what I'm getting from both the Argentinian and the South African experience, one of the things that does come out from what you shared is when we think about access to insurance, I think, clearly from what you described, it's not necessarily direct, and I think just going to the target segments and trying to get an insurance product out to them is probably not going to work for the segments that we're talking about. And it's interesting to see how it's about first onboarding them in the through payments and providing access to banking services, rolling those insurance solutions out with other things like credit solutions which they can then feel and experience and appreciate better than a direct insurance solution. So it's indirect ways of getting access to the segments that we're talking about. I think the other thing that came out for me was the insurance solution itself is just part of the equation. And I think there's so much more around it. Education, how regulation focused on consumer outcomes can also play a very important role. I'm going to turn now to Olga and ask you to talk to us about what the foundation is doing in the space of microinsurance and focusing particular on farmers. I think Juan also talked about that segment, which is important to many of us in the room as well, including in Malaysia. Olga.
Thank you, Jessica, and thank you to your band for hosting this wonderful event. So agriculture insurance and smallholder farmers is very close to our heart. That's the space we work, and as Fiona mentioned, through our work together, we work at the macro and meso level. And so what I want to emphasize in this discussion today is how do we increase the access to insurance is just to put the distribution channel up front as critical, and also the affordability of the product. Traditional insurance, in agriculture insurance, is unaffordable for smallholder farmers. So we are innovators of climate weather index-based insurance with the support of our foundation and of course the World Bank and IOC. And we have come along through many years of experience in the field. We started in Kenya insuring 3 camels, whereas today we have reached 1,300,000 farmers, and it's not a joke, but the challenge is still there. How do we reach? How can we really see insurance as a benefit and not as a cost? And so talking to affordability and looking at this room here, something that is very close to my heart is how can we transfer our innovation level, our innovation knowledge, how can we transfer that to the local insurer on the ground in order for them to bring this up and increase their appetite to take more risk, to increase their retention. And the same goes for the reinsurer. You know, in each and every country we work, there are local reinsurers on the ground. So the question is, why do we need to transfer the risk to the continental market that automatically becomes more expensive? Let's transfer that knowledge locally in order for the local capacity to take more the risk and feel more comfortable about. So that is one point. The second point is also we see insurance on a standalone basis is not really taking off. So we also see that insurance is an access to finance. So including an insurance component within a loan is already taking up. And that's a transformation that we do see. For that, we need also the financial education on the ground and put the smallholder farmer, the client, up front. What is the need of the client? How can we get the client involved in the designing of the product? That is really fundamental. And it's not to increase the sales of an insurance company, it's to find really a solution, how that solution can further access to finance. So technology, it's another crucial point. You know, through the technology that we include through our program, we reduce massively the cost of the insurance premium. Also using the weather data that is on the ground, but unfortunately is not enough. We need to invest more in weather data in order to better monitor and to have a much more robust product that it really works. So when it comes to subsidy, I don't like very much to talk about subsidies because I do believe we need to do some more hard work on the ground. You know, what is really needed? Let's invest in the infrastructure first. You know, what do we need to take this off? It's education, it's financial literacy, it's weather data, the financial education on the ground. Every farm has a potential to be treated as a business. And the farmer has already this in mind. So insurance is for them as important as an input of fertilizer. You know, and that is a transformation that is already happening. So I'm not a regulator. You know, I'm a former reinsurer for 18 years, and this is really my passion. But the poor and the smallholder farmer is in my heart, and I want to put this up front. And to come up with the right solution, it's tough. And I think it's a collaboration within many actors. You know, it's regulators, government, private sector, all researchers are collaborating. We need to take this all on board and try to make a difference. So the regulator as such should be seen as a facilitator, a catalyst, and not as a challenge. And what we do is actually in every country that we step in, the first meeting, it's with the regulator because it's the main point. That's the body that can guide us through the whole process and advise us best. Then of course we identify what is the risk exposure of the client and come up with the design that is really needed for the particular crop that is on the ground. Then we look at the data, we look at technology. You know, the payments, claim settlement need to really be fast. We're talking here about the bottom of the pyramid. They need to have a payout within 5 to 7 days, otherwise they cannot replant, they cannot pay school fees. So these are the mechanisms of the ecosystem that together with our partners we are trying to build, and it's fundamental. So yes, there is need for a joint collaboration from all practitioners and regulators, governments on the ground. Thank you very much.
Thank you. I'm going to just pose this question because we've talked quite a bit about the needs of the segments that we're targeting. But how in a domestic market, how do you actually attract companies? Zainal touched on this a little bit. How do you attract companies to actually want to play in this space? You know, I mean, what has been some of the experiences that observations that you have? Because it's not naturally the most lucrative market for companies to enter into. And you know, how do we create that environment where there is that interest? You can generate the interest of the private companies to come into this place, and maybe Olga or Zainal or anyone else on the panel can speak to that point.
Maybe let me pick up on that because you mentioned my name just now. I think the point I was trying to make just now in terms of micro insurance, micro takaful, is the fact that the poor cannot appreciate insurance as something which is tangible, especially if, you know, they don't really see anything coming back to them for the premium that they've paid, i.e. they don't profit from it, if I can use the word profit. Actually, you don't profit from insurance, you just basically protecting your balance sheet, but let's say it's profit, okay? We've heard some of the panel members mention about bundling, you know, insurance with credit. And I think in Malaysia, for takaful, that's been the most successful product, you know, bundling protection for Islamic banking products, as it were. Okay, and I think we need to take that as a clue in terms of how to make this work, and that if the poor basically do not see it as something which is tangible, then we should not be treating it as a separate product, rather as part of a product. We've talked about microfinance, for example, so you have micro insurance and microfinance, bundle it together. But you can also bundle insurance with other things. Just now I talked about fertilizers. You know, you can bundle insurance with fertilizers. You buy fertilizer, and within the price of that fertilizer, basically, you are able to get some insurance, maybe crop insurance, for example. Okay. Another way of bundling it could be that, you know, maybe for fishermen, you know, if they were to sell the catch of the day to one wholesaler or whole buyer, you call it, you know, maybe, you know, there'll be a small deduction from the amount of money that they make from their catch for insurance to cover them in case they lose their boats, you know, means of earning money, or in case the weather is bad and they can't go out and actually catch fish, you see. So this is again something which is a bundled product. Or another way of looking at it may be foundations. I mean, there are a few foundations out there, I think, that provide social services to its members, maybe through a membership card, you know, and through paying for this membership, you know, there is already in there some element of insurance. So you bundle it. Okay, so people can see, even though they don't claim on the insurance, they get the benefits of, as it were, you know, of social services that's provided by the foundation. It could be, you know, things like education services, or, you know, I mean, health services, post-maternity services. So this is one way to actually make it accessible, because for the insurance company in the private sector, one of the biggest costs, or two of the biggest costs, is that of distribution, because you have to pay an intermediary, and you have to pay an intermediary. That could be means that the compensation to the intermediary must be something which drives them to actually go out and sell. Now, usually that compensation is a percentage of the premium. If the premium is very small, then for the same effort that the agent has to go through to actually convince someone to buy insurance, because insurance got to be bought rather than sold, it's got to be sold rather than bought, you know, he can actually use that effort to sell a bigger premium to someone else, where his compensation is greater because it's a percentage of premium. So if we can actually cut down or eliminate that distribution cost, and which you probably can if you were to make it as a part of a bundle, go direct, if you like, to the foundation, direct to the fishermen cooperatives, or go direct to the farmers' cooperative, as it were, and cut that out, that actually reduces a significant proportion of the costs of actually doing insurance for that group.
Can I leap in? I'm going to leap in. So I agree. I think bundling has been a great success in terms of access, but also it can be a big risk.
Yes, of course.
So we recently, in my country, there's huge problems. Emma, I think, mentioned earlier sort of some mis-selling in Australia, and this is sophisticated financial markets where there's selling problems. One, you said people don't know they're buying an insurance product. Have you had problems with the farmers not actually realizing this is involved as part of the product? I was involved in one country where there was selling pension savings products with life insurance, which sounds fine, but people were coming out of the pension savings early and saying, why have I got less than I put in? It's like, because you had insurance. I didn't know I have insurance. Yes. So I agree that this is, I think to some extent we might have cracked the access problem, but I think we may be opening up other problems that need to be.
Well, that's where the regulators come in.
Yeah. And that is the dilemma, actually, that in fact, even here in Malaysia, it's an issue that we are confronting and asking as well, because conventionally, we generally frown on bundling, and we would like transparency to be given to the consumer as to what they're buying and that choice to be made available.
But
Jessica, then again, go ahead.
But Jessica, this is where the next part of the argument goes in the fact of doing it through a mutual, or doing it basically through takaful, whereby there's surplus sharing, whereby you have transparency in terms of how much of the premium goes towards paying claims, how much goes for distribution, and what's left, and that goes back to the association. Because the problem we have got with insurance, and that's why it's not Sharia compliant, is this many of the products out there are not very transparent. You have transparency when you sell group term life to an employer, because the employer wants to know, in terms of how much they deduct for brokerage, for example. But you don't have that kind of transparency in terms of many of the other term products. So that goes in terms of the business model. I think just now I was talking about access, but the business model, it could be a mutual, it could be a takaful, whereby you're very transparent in terms of what are the costs that you incur for the premium that you collected.
And that's assuming they understand what it is that you are disclosing as well. Let me go to Olga for some comments on this issue.
Yeah, actually, yes, I must say, there is a silent basis cover somewhere that I do not necessarily like, but there is. If we work through aggregators, in the form of telecom providers, NGOs, input providers, banks, once we run a survey to assess the impact, they might tell us you are not supposed to interview our farmers because they're not aware that they're insured, and then you ask yourself, so how do we want to build this up? That's a mission impossible. I think before we talk about insurance, we need to look at risk management more seriously and increase the risk management capacity on the ground with the smallholders or all the clients in order to start there, minimizing the risk in order to have a more affordable product going forward, and so less depending on systems like subsidizations and so forth. So there is the need of a homework here from the really basics. Now the farmer needs choices, really choices and tools, and I do not believe we should also push forward systems where we push the client to buy the product. We need to have the consistency and the best solutions on the ground just for them to see, oh, that makes sense to me, and I'm gonna buy because it makes sense, and because I could have invested 15% more in my plot, having insurance that my neighbor that didn't have. But then what do you do with this 15%? Do you automatically spend it? And then we talk about impact, and that's a different discussion. But yeah, it's you have both scenarios. They do know and they do not know. That's how do we move forward.
Yes, I just want to leap onto that last point. Is like, this makes sense to me, and it might sound a little bit trite when I talk about this from a consumer perspective. But in South Africa, we have a very, very, very high penetration rate on funeral insurance. No matter how poor the person is, they will buy funeral insurance because funeral is very, very important in the culture in terms of covering the cost of the funeral, not leaving the family dependent on it. We need to get to the stage where life insurance is more important than the funeral insurance. But it's not a product that's sold and not bought. It's bought.
It's
They
tangible.
go out and they want to buy it.
It's very tangible.
Because everybody will die. There will be a claim.
But yeah. But this fact that I'm telling you is not true in every single country. In South Africa, it's particularly true. Every person, no matter how poor, are buying funeral insurance because it's a need they've identified themselves that they want to go out and get. And they will either do it in the formal sector or they'll do it in the informal sector. And we have to educate them on the risks of doing it in the informal sector. But the point I'm trying to get to is that when an insurance company designs a product for itself, and obviously it's got to be prudentially sound, it's got to be money for the shareholders, but even worse, when they design a product for their distribution channel, that doesn't make any sense. You have to design the product for the customer, and in order to design the product for the customer, you have to understand what it is the customer needs. You're not going to go and sell him a death policy. You're going to go and fulfill a need, and that comes to the education thing. So I know it's pretty idealistic that you'll ever see insurance one day as being, bought rather than sold. But there are innovative solutions to the cost drivers of distribution which we can use using fintech. And I know that. And as long as we bear in mind the risks of fintech when we do distribution and the risks of bundling, because it's the transparency or the lack of transparency around bundling also concerns us. But insurers are very innovative, and they can design products according to customers' needs. But I found a lot that insurers design products around their distribution channel, which adds to the cost of distribution, because we're trying to sell a simple product to an unsophisticated market in a very high-cost distribution way, which means that the poorer people end up buying the more expensive products that don't particularly cover their needs, where the richer people are having access to simpler products at lower costs, and it just doesn't make any sense.
Juan, anything to add?
No, what you have said, Fiona, is that perhaps they don't, first of all, they don't really realize that they are paying the insurance. I agree with that. But you need to understand that these people mainly it's their first access to the financial market at all. Yeah. And so we believe that this could be an excellent first step, but it's only a first step. It's only a way for them to introduce them to the financial market, and you are already telling them that they are buying an insurance. And there's one more thing. Lots of these people that already took this loan, they bought a house insurance. And that insurance, they know that they are paying it, and they decide to hire it. Mm. So I believe that in our economies, it's really important to have access to the financial market at all as a first step.
Just coming back to the question of, maybe for Olga and Juan, what kind of private sector, what is the profile of private sector companies that are actually operating in this space successfully, and that are able to design the kind of products that the customers need, and actually have that as a core strategy of their business? What are you seeing in Argentina and maybe in other parts of the world where you have some activities?
In Argentina, what we are seeing is that the companies, we have a couple of main companies, as in Malaysia or any country in the world, that are really working with microinsurance for years, and they are willing us to provide the regulation in order to sell this type of products. I don't want to give names, but we have huge companies that are providing these services in Mexico, for example, and they want to have the same solutions in Argentina. So what I have said before, for years we have been an obstacle in the distribution of these products. And since we have launched a couple of microinsurance products, the success was immediate.
Yeah, you start to see the involvement of the private sector, I must say, and also in collaboration with the government, which is also very important. We have an example in India, for instance, where the government had not enough weather data in order to provide weather insurance products, and the private sector or the weather data providers were entering into a partnership with the government in order to provide the data and so to design the solutions. When it comes to insurers, it's tricky. They say, Olga, knock at our door when you have 1 million farmer. But they are not really every day there when I come with 100 or 200 farmers. So volume is the key for the whole thing. And so on their mind is return, on our mind is impact. I think everyone has a specific role, every stakeholder, private sector, non-private sector, and each and every has to be very clear what is the duty and responsibility of each and every stakeholder. But yes, the private sector is starting to get really involved. And
Do they tend to be specialist insurers in this segment, or from what you've seen?
When it comes to agriculture insurance, and we talk about the South, there is not very much experience on the ground, and so they really expect these kind of communities, to come up with already the solution. And once the solution is here, then what's going to happen? And then I look into this room, because you have the main role here. Those products that they have been designed on the ground, they need to be licensed. They need to be proof in order for that local private insurer or local insurer just to take that product further. And so that's where we need also your collaboration as a catalyst.
So just to pick up on that, if I may, so I'll give you an example. Okay, I'm going to massively oversimplify, but from what I'm hearing, it's almost we've cracked the access problem. Because, I'm deliberately being provocative. What you're saying is, say, one, you can actually do, if you've got digital ID, national ID, we're doing a lot of countries, you can take that out into the field and link people up in the most rural areas. You can do mobile access, you can get people using we're working on universal financial access, everyone should have a bank account by 2020 we're working on. And then you do the government payments so people start using it. So let's say, we in a way you can crack the access, but then that doesn't solve the market development problem. You still have a market development problem. And so Ethiopia, I think, is a good example where we're working, and some of this, I think, is public good from what you're saying. So the insurance companies don't have the capacity really to develop new products themselves. So we're working on one side with the regulator more on market research to say this is what you need, this is the demand, this is what people need. And then our colleagues from sort of the ILO on the impact insurance side are then working with the insurance companies to say, okay, we can see now from these sort of surveys what's needed. How can we help you build the right product then to fit that? So being deliberately provocative, you could say it's actually a market development problem more than an access problem. Discuss.
Caroline, you wanted to jump in there?
Let's have a coffee. So, I wish I could say we'd cracked the access problem. If we had, we could all go home. But I think that is a market development problem. But I think it's more than just a financial market development problem. So I think it's if you talk about inclusion, and let's go back to the fact that you need access to payment systems or access to banking. How do you get access to payment systems unless you're talking to infrastructure development, unless you're talking to the communications ministers and those policymakers? So you've got a whole range of problems. Obviously, as financial regulators, we can do our part. And in South Africa, the life insurers are very active in this market in terms of products. The short-term insurers aren't as successful, and maybe that's a hierarchy of needs things, and in terms of also product development or market development of the appropriate products. And we anticipate our microinsurance bill is going through Parliament at the moment, and we're hoping that when it does pass, we're going to see a flurry of applications. which will formalize a lot of the informal market that's been selling these products outside the formal sector. So yeah, I mean, agree with you. It is a market development problem, but it's and as you said earlier, Olga, the regulator to a large extent must act as a catalyst to this market development and not as a hindrance. And at the same time, it's a delicate balance of consumer protection and prudential management along with this market development.
Well, thank you. This might be a good time to see if there are some questions from the floor. Go ahead.
Yeah, Malagadi from GIZ. It's a very interesting discussion on agriculture insurance. Actually, we know that we made the calculations the other day, not more than 350 million people are in developing and emerging economies insured, farmers. 350 million compared to 20 times higher for general insurance, other types of insurance. So, and the main reason there is, and most of them have a credit. So this is agriculture credit, and that's why they got insurance, otherwise they wouldn't get a credit. Now the question to Olga, which is very interesting the way that you presented it, weather data versus remote sensing data, ownership of data, these are ongoing. I mean, there's no yet fixed solution on that, but definitely the role of the state is still important. Not so much on the subsidy, but on sharing. And sharing data will make the private insurance companies step in because it will be cheaper for them. They will know that already 2/3 of the data are available. Sometimes they need other type of data that the state has not yet collected. But remote sensing data are still on the hands of big insurance companies, reinsurers, and they will use it definitely primarily for their own clients. The question is, if we move a bit away from the end user, the farmer, to the value chain, do you see, Olga, there are possibilities of creating more, I mean, opening up a bit more the market to the private sector and give them more possibilities of bundling even products and step in and not wait only for the end product? Either we have more productivity, lower productivity, where the remote sensing or the weather data are very critical.
Yeah, wonderful point, by the way, and very good question. The data need is actually when we talk about non-traditional insurance, when we talk about index, and we need validated data. It's not about just data, it's about data that you can transform in algorithms. And so who is having this data, right? That's the question. It's not only in the hands of the reinsurer and the insurer, believe me. You have input companies, you know, you have data providers from all colors, you know, that they have this data under control. When it comes to satellite, yeah, sure. You know, we can have access to satellite data today, thank God, for free. But when it comes to ground proving, and I'm looking to my financial supporter here, then we need weather stations in order to prove what's going on the ground. And that's where becomes tricky. When we talk about agriculture insurance, basis risks is a major threat. And if we do not have the tools to prove that there is a claim on the ground, then we are lost and credibility is gone, and then forget access. Yeah. All right? Yeah. And so I think we need, as you mentioned, you know, to collaborate. The entire value chain needs to be on board. You know, not only insurance companies, reinsurers, but also providers, and invest in the infrastructure that is needed. Again, the lack of weather data is immense, and without that data portion, there is no further access to weather index insurance. And so those financial support from the government side, from the donor community side, should be really invested in this kind of need instead of just coming up with a high subsidization that it gets lost in translation. So, yeah, wonderful point. Thank you very much. It's fundamental.
Zainal, I might just come to you on that. From the industry perspective, do you see scope for, you know, areas where the pooling of data could be leveraged. I mean, what's the industry perspective on this? Is that what is largely holding back private insurers from entering this space?
I think from the perspective of life insurance, I mean, when you look at life insurance or family takaful, there's two portions of it. There is a savings element and there is actually the protection element. It's very difficult to justify in some cases that the savings element should go through the high cost of distribution, which the commissions they've got to pay. On the protection part, I think on the mortality, I don't think there's much difference between the mortality of someone who is in the top 10 and the one bottom 40. So from the perspective of in life insurance, the issue is still about affordability, that they might not have the money to pay for it, and the access, because, or if you like, the demand, if you like, because people are more concerned about putting food on the table than buying something as intangible to them as life insurance. And one thing I used to joke is that, if you want to try and sell life insurance, don't sell it to the husband, sell it to the wife. Because the husband dies, he gets nothing. If you sell it to the wife, see, if the husband dies, you get this amount. There is a value proposition there. But on the other hand, in terms of on the general insurance side, the bulk of general insurance we have in most countries, motor. We have that as well in Malaysia. I mean, motor insurance has been tariffed for such a long time. It's compulsory. We tariffed it just now. Only now people are collecting data in terms of risk factors, what should be the proper risk factors for motor insurance, right? So it takes time for that to develop so that there be more precise rating, if you like. But when you go to things like, livestock insurance, you go into things like medical for the poor, if you like, it becomes more challenging because the data is just not there. And that's where I think as well that, because when you do a rating, there's two ways to do rating. There's risk factor rating, and there's actually just, social security rating, if you like, whereby you just charge one rate, and then everybody will be subsidizing each other in terms of the cost of the cover. And I think doing risk-based factor rating is difficult, chicken and egg situation. If you want to do it for crop insurance or livestock insurance, it's tough. But if you do it on a social security basis, whereby you have a flat rate, it's easier. But then you need a backstop. And then I think it has to be the government, a backstop, that in case the premium is inadequate, the government will come in. And once you've collected sufficient data, then perhaps you can do the risk-based factor insurance. So, I mean, I've talked to some of the CEOs of insurance companies, and Jessica, they understood what the governor was saying at the MII dinner. It's becoming, it's becoming very clear now what needs to be done. Not that they didn't know about it, but now it's very clear what needs to be done. And I think the view from the insurance industry is such that they don't mind not making money, on the bottom 5, 50, 40, if you like, micro insurance. Of course, they won't like to lose money, but they see it as an investment going forward. That this bottom 40, if you like, will become more prosperous as the country becomes more developed. But then they are trying to figure out who should partner them into going into this kind of industry and this kind of segment of the market, because distribution is a problem, data is a problem, and they can't do this by themselves. So I think private partnership perhaps might work. Yep. But the message I'm giving to Bank Negara from the industry here is that they don't mind going to that sector, but they need help.
Okay. Any other questions from the audience? Go ahead, please. Can we get a microphone? It should be working. The light is on. Go ahead. I can repeat the question.
Thank you. Very good panel, so thank you. I just wanted to take advantage actually of the expert panel that is, what is the biggest barrier to insurance market growth? I'd just be interested to hear the panelists' views on that.
What is the biggest barrier to insurance market growth? Maybe we start, Fiona?
So I think it's back to market development, generally affordability and general lack of market development of the right products.
Olga?
I would agree with Fiona. Solutions needed. That they really see there is a product there designed.
The right products and affordable ones.
Yeah.
Carolyn?
Hannah, it's so hard to pick one, isn't it? But I would go with Fiona there and say it's market development with the appropriate product, but it's very, very hinged as well on financial literacy and on knowledge.
I want to be slightly different. I think it's the delivery vehicle. Should it be basically share-based? Should it be mutuals? What should be the best way to actually access the market? And one other point as well that you look at some countries, you find that insurance development is not as great, and that's because of the fact that not that it is not good, it's because the government takes care of the population. They have life, the government provides them with pension, provides them with protection. There's no role, if you like, for life insurance from that perspective. So what's the role of government in this? If the government's role is very big, then insurance will not grow so much, but that doesn't mean it's bad, So that would be 2 points I would make.
Right. Juan?
I believe that it's not only having the right products, but for countries as ours, it's also the regulator being like a facilitator and a catalyst in order to deliver those products.
It's a good point, because you talk about market development, and clearly the government and regulators often have a key role in that process. Any final question? One more? You might want to try.
Oh, yes. Hi. Emma Curtis from ASIC. Just in relation to, I guess, consumer literacy, putting aside availability of products, what do you think of using nudge techniques to encourage consumers to take up products that might be suitable for them? And I guess this is an issue of, it does get back to that bundling issue, but where the product does have an underlying benefit for the consumer to help protect against loss. For instance, if they've taken out a loan and they need to protect the underlying asset that they've borrowed to purchase against loss. I guess, so my question is, what do you think of using nudge techniques in that situation?
Yeah, so I mean, behavioral economics is the current learning curve I think we're all going through. And nudge can be both good and bad, obviously, because you could be nudged into buying a product that you do need, but you don't know you have it, which is also bad. But I think nudging along with transparency and understanding and good outcomes is got to be the balance. So I think using behavioral economics in consumer education as well as in buying processes it's going to be the future. But I think it's got to be bundled with transparency.
So I think it's very, with these you say the transparency question, but I think it's very positive. So for example, I think what you're saying, the example in Argentina, is sort of nudge where what we've seen a lot, for example, in India, where you've seen this massive increase in access to bank accounts and bankability. The nudge was that the government payments, if you have any sort of government cash transfer, it now has to go through a bank. And as I say, you have the access, the digital access to then help people open that. And then the nudge to actually get them to start not just having an empty shell of a bank account, but actually start getting the usage has been, the nudge has been through using the cash transfers of the government payments has been a very good nudge example, I think, to do that. And I think, as I say, it's then had in feedback through into things like the insurance market. You're an example where that's worked. So I think it's positive. I don't get me wrong, I think bundling is a good answer. But I think as a little, some of the transparency concerns I think are there.
Can I just one point here? And I think one thing that a government needs to decide is to what extent is their responsibility to take care of the lower income group, and to what extent basically effectively, the lower income group should effectively take care of themselves. It's a very fundamental question, because the issue here is that when you talk about insurance, you're talking about risk sharing, and you're talking about basically the individual paying a premium to actually ensure that they get protection. But you think about it, you've got social security to some extent taking care of a major part of the population in some countries, in terms, for example, pensions, first pillar. And basically, how is that funded? It's basically through taxation, whether directly or indirectly. So there's a question of, whether in fact, you need to do this through insurance, or whether we need to do this through the government, through taxation of the high income group. Is a fundamental question you need to address. And if you feel that it should be insurance and not through the government, then I think the government still have got a role to play. I mean, for example, for life insurance in Malaysia, we have tax deductibility, whereby you get the government will chip in to the cost of your premium. But the problem we have is that the bottom 40 population do not pay any taxes. So maybe a change in a way. If the idea here is to get the bottom 40 basically to actually be self-sufficient, then I think there should be incentives for the bottom 40 to do that. So there's a role for government, very important role for government for access.
Juan, anything to add to that? And Olga, final comments? No? Olga, anything?
Yes, maybe talk about the transparency. Mate, I think technology, it's fundamental. When it comes to governments, when it comes to claim settlement, the technology plays an enormous role. That, again, to emphasize what Juan said before, regulation comes on top. We are talking about financial products, and it's in the hands of the regulators to help us to push those products further.
So that comes back to me.
To you.
All right. Well, on that note, let me bring this to a close. I think a couple of themes to take away from the panel discussion today. Number one, I think the remarks made around collaboration, and there were quite a few comments on the role of market development being a very critical role in improving access, and that requires many stakeholders to come together. Number two, I also liked some of the remarks that were made around access is one thing. How do you then sustain, right? How do you then make sure that people who have insurance are actually benefiting from insurance, that they know they have insurance? And I think sustaining insurance is about, we talked about the experience. And I thought that was an interesting insight, that if there's no experience with insurance after 3 years, then people tend to drop off. There's issue of education being really critical as well. Maybe a third theme is, really just understanding what the segment that we're targeting, what their real needs are, and reaching that, rather than designing products around whether it's distribution or whether it's return to shareholders. I think we might need to do more work to, get data, to, understand the markets that we're focused on. So on that note, let me thank all of the panelists for your wonderful insights, and if you could join me to give a great hand to the panelists. Thank you very much.